Hey everyone.
Yeah, you there.
There you go. We're just sorting out the technicalities. Hi, my name is Dario. I'm the founder of a company called Briter, who I started pitching as the gossip girl of business in Africa, just for everyone to contextualize what we do. I'm very grateful to be here. To the organizers, we've been on a happy marriage for a few years now, and I'm always grateful to fly here into DC or Cape Town. So the reason why I'm here, I usually go on stage to discuss the state of things and try to set the scene about what happens in Africa. Our job at Briter is to create a stock of data and information that can allow private public sector to get a sense of what happens in their target markets, with African markets having been, at least for the past few years, our core focus. So I'll be walking. I know you've already got into some juicy conversations about the state of finance on the continent, and especially over the last few months, given what's happening over the last few months. So I'll try to walk you through a 10-year journey into the state of investment on the continent, how this has changed, whether there's room for optimism, and what different metrics can be used to come up to formulate an opinion about the space. So I call this talk Analyzing the State of Investment in Financial Technology and Inclusion Across Africa. Obviously, this is a fintech summit. It's not a sector agnostic summit, so I'll be focusing on specific aspects of the industry. But thank you again for having me. So just very 10 seconds, Briter was born 5 years ago actually as a magazine. It was born in Manila and then in Uganda. So I hold these places very, very, very dear. And we've been working with private and public from the start. It started as me taking photos and writing about stories on entrepreneurs and how entrepreneurs across the continent were changing the status quo. And then by way of running stories, I started keeping a log on Excel, and now this log is millions of data points 5 years later. So as I said, I'll be walking you through kind of a 5 to 10 years span, because I think it's very important to take into account what has happened over the past decade, and not just the last few very troublesome years that we've been through. I think it's very important and fair to everyone to acknowledge that the past 3 to 4 years haven't been exactly the norm, and the fact that we're all here to witness this, it means that somehow we've all been grinding and struggling to get to where we are, and to keep our businesses alive, our funds, to get the right returns. But what are we looking at here? So let's not take a look at this as from a perspective of venture capital, but from a perspective of access to finance on the continent. We've seen, literally since the beginning of the 2010s, a steady growth into the ecosystem up until the late 2010s, where we've started witnessing an increase. This increase is tangible. You can see the amount of investment, the amount of interest, and the number of people that have entered the conversation and the ecosystem over the past very few years. And then what happened, obviously, in 2020, we witnessed, at the beginning of 2020, we witnessed the outbreak of COVID, and then just off the back of the issuance of the vaccines, the optimism came back worldwide, and this has been translated into optimism across the continent as well, and we've seen a spike in deals. And then the spike has led to the creation of what many call a little bubble in the tech space, an overvaluation spike. And towards the halfway through last year in 2022, the investment pace started slowing down, and 2023 according to many, is expected to, to even be slower. Now, this is a perspective, what we see on social media, what we see on Twitter, what we see in articles, media articles. I would like to offer a quite different perspective. So the reason why I drew a straight line from 2018 is because if you actually take the money that got deferred into 2021 and you put it into 2020 when many of the actual investment were supposed to happen, you can actually see how you can draw a straight line all the way into 2022. And if you analyze the ecosystem according to this perspective, you can actually see that access to finance for businesses on the continent has actually steadily been growing for the past half a decade, and it's definitely been growing faster than the beginning of the decade, and even faster for maybe the entrepreneurs that have been starting businesses over a decade ago here on the continent. You can actually see how tangibly the investment across the 2010s increased. And then I've done the same exercise through number of deals announced. Now, it's probably going to be hard for you to differentiate between the colors, but what you can see is that the last 3 to 4 years have seen a gigantic spike in the number of deals and activity, so that the amount of activity that is happening across the ecosystem. I'll be explaining later on why this has been the case, what I think to be the case and what the data show. But basically what you can see is that there hasn't just been a spike in the number of huge deals that have driven the numbers up, but also in the numbers of actual individual deals, and so the activities, the number of investors that have entered the room, the numbers of companies in each cohort, right? From YC to Founders Factory, and a number of rolling funds and angel networks that have been set up over the past few years. Now, this is another map that wants to show this shift. And again, I don't want to be, and I'm not here to create hype. I don't think, I think that the age of hype for the continent ecosystem now is coming to an end. I think we're entering an adjustment and maturity phase. But what this shows is that, yes, 4 out of 54 countries capture most of the funding across Africa, but also on my right-hand side, your left-hand side, you can see that the distribution of funding just less than a decade ago was far less than the distribution of funding that we are seeing as of 2023. What does this show? That the 4 countries don't just hoard all the money, but they also act as catalysts for access to finance for all the neighboring countries, right? East Africa is a particular case for this, right? Ethiopia, Tanzania, Uganda, but even Sudan, right? Even Sudan, even Rwanda have been accessing finance. There are a few entrepreneurs here who are active in Rwanda and Kenya and Uganda and are expanding by way of going to neighboring countries and knowing, being familiar with the area. And so what you can see is that these countries, yes, they do capture most of the value, but a lot of this value get trickled down into their neighboring countries, because many of the companies actually expand to their neighbors. And now there's the data to justify this, and now there's the data to prove this. Same here. We move from the total amount of funding, the number of deals, the geographies of funding. This is actually a slightly older slide. I just put it into to give you another perspective. I mean, it's Q3 2022, so it's not as old. But what you can see is that the number of companies that have now $1 million companies that have access, not valuation-wise, meaning funding-wise, have actually more than quadrupled since 2018. So I'm not even talking 2014, 2010. I'm talking 2018, which is when Briter started, right? And this to say that even since I began my journey as the gossip girl of Africa, what you see is the quadrupling of the numbers of companies that have reached a milestone that's very important, even from a narrative perspective, on the continent. And obviously now we're 6 months after this slide was built, and the number of companies even increased. Again, obviously here we're talking about fintech, so here I switch a bit my conversation. Fintech has dominated, I think we're all aware of this, fintech has dominated the investment landscape. Access to finance has been critical, the creation of payment rails, the creation of access to credit lines, the creation of alternative decentralized finance have all been critical steps into the creation of a long-lasting and sustainable ecosystem, which we're still in the process of witnessing. But fintech, in the little bar chart at the bottom, you can see has actually captured around half of the funding, of total funding across the continent for the past decade, right? But what are we witnessing now? There's an increasing diversification in access to finance. There's been obviously a massive wave of interest into what we call high impact sectors. So a wave of financing into agriculture, wave of financing into logistic and supply chain management, and a wave of funding into what is now like climate tech or clean technology. A little digression on clean technology. Some of the interesting trends that we're witnessing in climate smart finance, climate smart agriculture, climate financing, is that they're actually attracting beyond, like attracting more investor than the VC space. They're actually starting to attract the big corporates by way of acquisitions and partnerships. They're actually they're starting to attract private equity, and they're starting to attract large impact funds. So they're blazing the trail for new types of investor to enter the conversation on SME and innovation on the continent. Now, I wanted to take a look at some of the companies that have been scaled on the continent. This is basically a summary of what the state of fintech in Africa looks like as of today. And just a caveat, we cannot disclose any information on deals that haven't been disclosed. So I know that there have been a few companies over here that might probably shift towards the left, towards bigger boxes. And I know some of the investors in the room might know this, but this is what can be disclosed publicly. But as you can see, we have started witnessing many companies expanding beyond the continent. So we've seen Tala, we've seen DPR Group, we've seen Branch, we've seen Jumo, we've seen Bima, we've seen M&T Alan. Zeps is the holding of Wave and Sandwave, even though there's a bit of a structural complexity in how this specific company is built. But I found very interesting the fact that many fintechs right now are expanding beyond the continent. And this is just a summary of some of the names that you probably have all been familiarizing with over the past few years. But then again, we count about 400 more companies in the fintech space that have been accessing finance, and probably many of the earlier stage companies are in the room today. Again, this presentation can be sent. I think the organizer will probably be sending it afterwards. 1 minute, okay, I'm about to round up. So we're in the US, so I thought I would probably take a deeper look into who the investors are. And one of the conversations that are happening in the space is there's a big reliance on overseas investment. On the one hand, this is a natural process in the sense that as companies scale, they start to attract international investor. On the other hand, one of the hot conversations right now is on the over-reliance or else the little presence of local LPs and local capital that can counter the presence or can probably piggyback the presence of international investor. So taking a look at the investors that have been participating in deals for over $100 million over the past 4 to 5 years, you can see that the US dominate the landscape. Probably have another couple of slides, but let me know if like this can, again, I can share this with all of you. But one of the other aspects that make me very optimistic about the space is the fact that the involvement of corporate in the ecosystem has grown significantly. And this is not just by way of offering venture solutions and access to finance, but also because they offer talent, they offer capital, they offer partnerships, they offer existing technical and logistic infrastructure, and also know-how. And on top of this, obviously, they are critical client to many of the companies, especially those doing B2B on the continent. So this is just to give you an idea of the state of the landscape from when it comes to corporates. 20 seconds. And then another aspect of this, as I mentioned at the very beginning, one of the drivers of this increase in activity is the fact that there has been a massive rise in the industry-focused early-stage investors, right? I mean, it happened, the sector specialization has happened all across the value chain, but especially when it comes to early stage. There have been many investors that have decided to specialize on specific verticals and devote all the resources, their know-how, their kind of venture building capabilities to this. These are some of the names that I've extracted. I think I've run out of time, but I think this presentation is probably going to be distributed by the organizers. Thank you again, and feel free to ask me any question later.